All right, so you've got a stock portfolio or some superannuation, and you just want to look over the horizon and think about what could happen. Um, Now, none of what I'm going to show you is going to predict the future, but what it can do is it can surface some of the variables, some of the problems that might be going on in the world, um, and you can use it for scenario modeling. So you can start to think through, what are likely scenarios going forward, etc. Um, One of the most powerful tools for this I have found is this tool, Perplexity, which I've got a subscription on. This has some new data sources in the financial world that are very credible, but it also has access to all news. Now, traditionally, people, look for different articles or follow different stocks. But in this new world, we can start to model scenarios or things that we think might happen in the market. So I just actually wrote this post. So on all available data, can you please provide all the reasons a collapse in the US regional banks is probable in the next 6 months and the reason why it could be highly disruptive to the new incoming president? Okay. Look at factors like commercial real estate, insurance costs, Federal Reserve, lending facilities and policies, and the generalized trend to digitization and consolidation in banking. Also look at global factors in your analysis, including geopolitical forces, China, the war in Ukraine, and problems with Taiwan and the Korean Peninsula. All right, so let's just bang that in there on a pro search. Wow. Okay, so this is digging into credible sources right across the world. Regional banks are heavily exposed to commercial real estate sector. Over 1 trillion in CRE loans come due in the next 2 years. So that's from HBR. Office vacancies have reached a record 20%. That's from Reuters. Many CRE corporate real estate loans are in negative equity with the values. Banks with concentrated CRA exposures, insufficient capital cushions are at risk of significant losses. HBR again. The bank's term funding program, which provides support to banks, is ending on March 11, 2024. The conversation. The closure of this may increase banks' borrowing costs and reduce profit margins, and the potential end of the reverse repo buffer could further strain banks' liquidity. The banking industry is undergoing rapid changes. Energy security in Europe. Financial markets. Rising deposit costs are putting pressure on regional banks' profitability, stringent credit standards, and weak loan demand from consumers. There you go. Now, let's say you buy into those arguments. This actually gives you a whole bunch of other things to think about. So how might it collapse impact the new president's agenda? Rising interest rates affect. Okay, let's look at this one. If you're looking at the Reserve Bank of Australia. Crisis management. To pivot towards more interventionist policies to stabilise. Bank failures can assess government bailouts or support programs. So you get the idea. So you can really explore issues deep with data with this tool. And I'm actually starting to sort of, not for my own productivity, but I'm actually finding this probably the most useful Gen AI tool for everyday use over everything else, just because of its deep data um, connections. It's kind of like all your news sources rolled into one, and um, you can model various scenarios, which is really interesting. All right, that's enough for today. Hope you enjoyed. Cheers.